Good day, everyone, and thanks for joining us here in the charts. You're tuned into the Market Beast edition. Yes, it is your fellow compadre speaking. Now, guys, I know the title's controversial. I'm going to need your time for just about 7 minutes. Hopefully, we can squeeze this in 7 minutes. I'm going to explain why I'm suggesting that the pandemic did not create the drop in the S&P 500. Just stick with me to the end. You have to listen to all the way to the end for this to make sense. And if you are just joining us, welcome in. Really glad to have you here. Subscribe to the channel. Engage in the comment section, leave an appropriate thumb. It helps with the YouTube algorithm, guys. We really appreciate your support on the channel. Let's get into this. Let's not waste time, guys. Again, if you have an open mind, but I'm going to explain this for you, and it's going to blow your mind here. So let's go ahead and dive right into the charts here, shall we? All right, so today is December the 25th, 2020, and the previous close of S&P 500 is going to be $3,703.07. It's up about 0.3% for the day. Okay. All right, guys, I'm going to reveal the lines. It's a little bit messy, so have an open mind with me here, but everything's going to make sense. Let me explain. Okay, these are the lines. I'll explain everything really quickly. It's actually 5 parts of what you're looking at. It's more than 5, but let's just stick to 5 for now. This red area here represents consolidation. White area here as well, consolidation, and the blue area right here. So red, white, and blue. Okay. There's 2 other phases within those phases that I just showed you. This yellow parabolic curve acts as support. And of course, this green ascending channel here also acts as an important range for the price action. Okay. Now this has taken place ever since, let's see, from the 1960s on up to present day. Now hopefully you can just kind of take a visual picture of what you're looking at on the screen, because we're going to go back in time just to see if we can see something that played out similar in the past. And this is what you're looking at here is the time frame between 1872 up to the 1930s before the Great Depression. So the same thing, this red area down here, this consolidation range, white area consolidation, and the blue range consolidation, red, white, and blue. We also have our yellow parabolic curve as well. And we also have the green ascending channel. Now, here's where I'm going to go ahead and start explaining something to you, okay? Again, this area right here represents the Great Depression, okay? For some of you who don't know, the markets had a very severe crash, I think about 80% to the downside. And hopefully you took that visual picture of what we showed you before we got down here back in the back in the 1800s and the 1900s, okay? So the only thing that we're really going to pay attention to here is the price action within this ascending channel here, and the behavior in which it displayed before it actually broke up and broke down. Okay, just notice the price action just kind of continued to go up within this range before it broke up above the ascending channel. It found resistance. It topped out right in this red circle area that you see there, and was quickly rejected back down in this green box and actually through that ascending channel, breaking through that pink line and just making it seem as if it was never going to recover ever again. Hopefully you guys caught that. Okay, and let's just explain that really quickly. The price action was within this ascending channel before it broke above it, quickly was rejected below the ascending channel. Dead cat bounce, broke below that pink line, and just never stopped falling. It felt like as if it was never going to stop falling. So let's take that over to present day, guys. Let's focus on this green ascending channel here, okay? It's going to make sense, okay? This green ascending channel, price action just kind of bouncing within here, of course, and I think you know where I'm going with this. It broke above the top of this green the ascending channel. It topped out in this red area, and then it was quickly rejected back down and through this ascending channel before, of course, the buyer stepped in and broke back above within this channel. Now, according to history, what could have played out was, of course, a price action bounced within this green area, and then it broke out above that ascending channel, and then it broke back below that ascending channel, had a dead cat bounce, broke below that pink line, and of course continued to collapse down below those levels if history were to repeat itself again. But obviously, in hindsight here, history chose not to do that. And I think for those of you who are smart, I think you guys know what happened when the price actually peaked just below this green ascending line here. pure speculation. I'm not sure exactly what happened, but I think it's pretty clear that there was a lot of capital being pumped into this market to continue it to the upside, and that's exactly what happened. So we're actually going to come out with a video, and really quickly, what we're going to do is I'm going to prove to you that the markets were going to drop one way or another, whether the virus that we've experienced here recently came out or some other black swan scenario. The markets would likely have experienced a drop to that specific level down at about $2,100. And let me prove that to you here right now on this video. So we posted a video on December the 29th, 2019. Stick with me here, guys. We said in this video that the price will likely reach a level. Hopefully the sound quality is good, guys. I'm going to play it here. So listen in, and that information goes as followed. If I have to just go ahead and make a prediction here, the first level that I would be looking at personally would be the $2,100, $2,000 range, like instantly, like less than a year, honestly, less than a year and a half. Very sharp, right? And some may say, oh wait, that's pretty bearish, but guys, we've been overheated, per my opinion, right? We've been overheated for quite some time. From the current level, that would be a 34% retracement. Not that bad, but so there you have it, folks. I don't know if this sound quality is good, but we simply were saying that, and notice the price at the time was $3,240. We were simply saying that at some point in the markets, we were going to experience some sort of retracement. And I'm going to point out the day that we actually posted that video. And that day was actually somewhere around, what was it, December? Let's just go back. December the 29th, 2019. So let's just go ahead and correspond that with the price action. And that's going to be somewhere around here, this area right about here. This is when we came out with the video, okay? And our price target was going to be, I don't know if you guys heard it, but we said there's only one level. The first level that I would be anticipating the price to go down to, I mean, instantly drop down in less than a year or a year and a half, would be the $2,000 level, which is right here at this pink line, or the $2,100 level, which is exactly at that wick, if you can see that down there. These are the daily candles, by the way. It literally came down to that wick, guys. The low on this daily candle is actually going to be $2,191 on this candle. So we call that perfectly, okay? So the reason that I'm saying that the markets were going to anticipate a drop, whether there was a pandemic or not, is because we specifically said in this video. And again, guys, hopefully we're going to leave links somewhere. Be a little patient. I wasn't as enthused in that video, so it's a little bit boring, but there's a lot of powerful information. I don't know if the quality is that high on that video, but just check it out when you get a chance. A lot of powerful information in that video. We said that the markets would drop about 34% in that video if the quality was good. And I'm going to measure that for you guys here from the top out candle, or the most recent top out before we posted that video, or after we posted that video. And we'll measure down all the way down to the wick there. And that's going to be about 34.4%. So that was perfect. I mean, if you're not subscribing to the channel at this point to get the information before it happens, then I don't think we're ever going to earn your subscription there. Subscribe, guys. Hit the bell so that way you'll be at least have an idea of what we're seeing in the market and that what could potentially play out. Again, guys, this stuff is not guaranteed, but this was a very accurate call. So what we're going to do is we're going to do the same thing that we did last year. We're going to post a video on December the 29th and give you guys our assessment on what should take place or what could take place in the markets moving forward into 2021. So again, guys, subscribe, hit the bell so that you'll be notified. We made this perfect call, and this way you'll know where we see the markets going next year, and then you'll find out where we see the markets going. Is it going to be up? Is it going to be back down? You have to be subscribed to get that information, guys. Again, December the 29th is when we're going to post that video. And so look forward to that. And the reason why I put that in the title is because think about it for 1 second. I was able to predict that the markets were going to experience a 34% retracement right here before the markets dropped. So essentially, I was able to predict the news that was going to cause a quote unquote catalyst to make the price drop. No, guys, I seen the markets were shaping up to be unsustainable, because I look at price action every single day of my life, okay, for the past almost 3 years. And I'm able to understand that when there is weakness in the trend or specific candles, the way that they develop, whether or not it's going to be a sustainable move or if there's weakness in the trend. That's why I'm saying I was able to predict the news before this pandemic. Guys, please just have an open mind and understand that the news is not going, the news is going to give you guys information only as far as I don't understand the news, guys. I just know that I was able to predict this before the news. Okay, there was a 34% in the market drop. Okay, before this pandemic. So I think that at this point, you should definitely take into consideration technical data, because that's the only thing that I paid attention to in order to dictate a 34% drop in the market and to dictate a specific level that the price went down to perfectly. And this was all done by technical data and technical data only, guys. Hopefully this was an eye-opener somewhat, and we're gonna have critics, guys. Leave those comments down below. That's fine. I'm okay with listening to each and every one of you. I actually appreciate all of you. There's no such thing as a bad comment, guys. Leave your comments down below. Let me know what you think is gonna happen in the market. Let me know what you think about what I said in that video. Do you think it's still related to the pandemic that the markets dropped, or do you think that it was simply gonna happen one way or the other? I personally think that was going to happen one way or the other, because I seen this in the charts. I seen the weakness in the price action before the move happened. Okay, so that's all I'm saying, guys. Hopefully you enjoyed that. Leave an appropriate thumb below the video if you enjoy the content, and of course, leave a comment down below, guys. Let me know what you think about the information that I just shared in this video. And it's Napoleon Macro, guys. I'm going to go ahead and sign off. Take care of yourselves. Protect your portfolios. We're going to talk very soon, and bye for now, guys.